Good morning. This is Julie. It is May 3rd, Tuesday, my favorite day, 6:18 a.m. Um, let's take a look at the rules and disclosures so we can get started with our market review. The risk disclosures and hypothetical performance disclaimers are on the website, so please take a look at those and the other disclaimers. You need a trading methodology to approach the market. Think of it as a overall theme, and I guess that is the best way to summarize what you're doing. And my theme is to trade with the higher time frame trend whenever possible. And that simply means trading with an objective. So here's the volatility coming down in crude, but we're going against the trend. We're moving up into the volatility. And so we know where our targets are. So we have our weekly, daily 60, 15, and you can set your charts up to look at these volatility breaks and be able to get these pullbacks after those breaks, or at your favorite level of trading your volatility bands. I still say that the super trend indicator is one of the best indicators that you can put on your chart once you start understanding how price responds to these levels. And when you get a signal off of a volatility band, it's usually a good time to enter the market because you're going to have some movement with you in that direction. And so depending upon what direction you're looking at, you can certainly take advantage of that. But overall, getting the ability to come in and see what you've got, momentum, divergence, at a trade location, I mean, you can't get any better than that. Just put momentum on your chart, and when you get a divergence signal, you know where the value area is, and you know price is probably heading there on these signals. What a great high probability trade. If you know what direction the market is moving and you get your signal, that is about as high probability trade as you can get. Period. So you could put a little bit more position size on that and write it back into the value area, which it's doing right now. Now, this doesn't mean that it's going to go into the value area and make a reversal. It just means it's heading to the value area to pause, slow down, and then make another move, probably back in the direction of the original trade. It's just that the momentum is sinking for right now. And in crude, we're stuck between some pivot points. Here was last week's pivot. Right here, last week's pivot point at 42.40. So we're trading above that. We're right now currently bouncing at S1, coming back towards yesterday close, I would imagine. And we'll see if we hold this pivot or whether we continue to come down towards this prior zone at 43.70 S2, which is probably a good guess of where this market might be trying to fade back down into. But if you can, trade your higher time frame trend as much as possible. I prefer it when they're all four matched. But trading these reversals is an art. And getting your chart set up so that you're not taking the little bitty tiny ones is something that I've pride myself on being able to do. sitting out so that you can get the most out of a signal possible, and recognizing that the higher you put your bar, I'll just show you the evolution of this, the better trades that you're going to get. You see that the bar size increase just incrementally by 5 ticks does wonders for keeping you in a trend as long as possible and showing you the volatility squeeze, like yesterday, between the point of control, the 25% point of control, river of gold, and this volatility level, squeezed it like a pancake back and forth between it. You get a much easier shot at what the price is actually doing in the market. So much better longer trade opportunities when you increase your bar size. Much higher trade probability, but sometimes our budgets don't allow for these larger bar sizes. We can look at them, but then we have to set something more realistically obtainable, so we not keep knocking these down and even get to the point where we're intraday trading inside of them is what I like to do. Something very manageable inside a larger view. So once I get my framework or your template of what you want to do, I guess, how would you describe it? Not a template or a framework, but your theme. I think that's the best word. My theme right now is short. I'm trading underneath my volatility bands. So my theme will continue to look short, even though I've just bounced at a level. I'm bouncing to come back into value. So the best way to trade this is to wait for the market just to get up here and turn back around and wait for my signal. And as I was demonstrating, the best signal to take is when you have a higher bar size than this, something that will allow you to get in and sit through the middle noise so that you can stay in a directional trade as long as possible. And what better way to sit in a directional trade? Let me put this back real quick. The best way to sit in through a directional trade and sit out of these little doji things is to trade in the direction of the higher time frame and wait for a signal. Don't set your chart up to take every single tiny reversal, because those will fake you out. But recognize what these little ones are, get rid of the noise, and try to stay with a trade as long as possible. And really have your eye on these support resistance areas and recognize that a trend can go on for miles. I call them miles, for 50, 100, 150 ticks in crude oil very often, very often. Lots of 50, 100 tick moves. Let's just take a look at this one, for instance. There's a $1 move right there. That's 1,000 ticks, and I didn't even extend it all the way. So that's $1,000 move. That's 100 ticks. So these are the ones that you want to capture You want to give yourself the highest probability situation to go in and take some of these long directional trades out of the market without having to expend $500, 500 dollars for these candles on these larger bars. Too big for my budget for just day trading. So that's why I come inside those and then try to get in once a move has started on my higher time frame, or is keeping on the volatility level. And speaking of these volatility levels, there's no better place to take a trade than when price backs up to it and then turns around. You see these wicks showing the distribution on the upside. Right here's one, so that you can continue with the volatility in that direction. Here's another one. So these are little gems. Once you get used to seeing how price responds to your volatility levels, and recognizing the turns in an uptrend, the reversal patterns, so that you can take profit or get out of a position and recognize that the market's probably going to be turning around. Few errant stop runs notwithstanding, and then wait for the bar to turn around and get in on that new trend, using your value areas and directional trade locations. So that's how I use the direction guide. This is definitely coming short today. So we're definitely proceeding to the downside in crude. Look for your targets to trade to. Get a game plan on of where you've made a mistake and you're not in the right direction of the market anymore. And recognize that price is going to ebb and flow inside of this. And just try to jump on the trade when you get a signal to do so. That's the hardest part for me, is jumping on a trade before I get a signal, thinking that I'm going to be fine, and then it pops back up. So wait, right now I've just got a signal. So a good place to take a short and to take this on down. This is Julie, J Auto Trading Strategies, hoping you have a great day. Thank you.